Hello, students. Today I'll be teaching you amalgamation of firms. So I have chosen this sum. Okay, let us read the sum. Ram and Lakshman were equal partners in a firm. The balance sheet of the firm as on 31st March 2019 was as follows. So we are given liabilities and assets. Okay. Then on 1st April 2019, Ayodhya Limited was formed. Okay. Oh, just a minute, students. This is sum of conversion, I guess. Okay. So we'll do conversion. I thought this was the amalgamation. Okay. So we'll start conversion only as you had asked for. So let us do it. Okay. So partnership form is given and it will be converted into Ayodhya Limited. Okay. So on 1st April 2019, the very next day, Ayodhya Limited was formed to take over the business of the firm on the following terms. Just give me a minute. Okay, some information is given to us. Let us read. The goodwill of the firm is to be valued at 2 years purchase of average profit of preceding 4 years. The firm's profits in the preceding 4 years were 30,000, 40,000, 46,000, 44,000 after setting aside rupees 2,000 to reserves each year. Okay. Building and machinery were taken over at rupees 2,50,000 and rupees 90,000 respectively. Okay. Provide for doubtful debts at the rate of 5% on debtors. The firm agreed to discharge 12% of bank loan. Okay. Other assets and liabilities were taken over by the company at book values. The company discharged purchase consideration by issuing 3 lakh rupees 3 lakh. So this is the amount of equity shares of rupees 10 each, fully paid at par. And rupees 1,20,000, 10% preference shares of rupees 100 each, fully paid at par, and balance in cash. Prepare necessary accounts to close the books of firm and prepare the balance sheet of Ayodhya Limited. Okay, students. So in conversion, some basic things I'll tell you. There will be given a partnership firm, or they may give a sole trading concerns balance sheet, and a new company will be formed to take over the business of the ongoing partnership firm or a sole trading concern. Okay. So what will be given to you? They will provide you a balance sheet. And adjustments relating to assets and liabilities taken over, and uh, that's it. This will be provided to you. As you can see, balance sheet is given of old firm which is being taken over by the limited company. Okay. What is expected? What is asked? Okay. So you'll be asked to prepare um, new balance sheet or balance sheet of the limited company. Okay. But in the process, you need to close the accounts of the old firm and calculate PCs. So in all, three things are there. First, calculate purchase consideration. Okay. Now, what is purchase consideration? Let's see, if you buy anything, you have to pay something in return, right? Okay. Whenever you buy something, you have to pay something in return. That is money. Okay. So when a partnership firm or sole trading concern is converted into a limited company, it means the limited company is buying the old firm. Clear? So in return, the limited company will give something to the owners or the partners of the partnership firm. Okay. So whatever is given is called as purchase consideration. Clear? Okay. So new firm, new limited company will give something in return to the old firm or rather to the partners of the old firm, and that whatever is given is called as purchase consideration. The price which is given by the new company to the old company is called as purchase consideration. Clear? So this will be the first calculation. Then second, discharge of PC. Discharge of PC. That is purchase consideration. Okay. Now, once you decide what is PC, the amount of PC, then they will tell you how it is settled. Okay. How many equity shares are given, how many preference shares are given, how much cash component is given. It is called as a discharge of PC. Clear? Then we have to close books of old firm. Okay. We have to close books of old firms. That is old partnership firm. We have to officially close the books of old firm. For that, we'll be making a realization account. We'll be making a realization account, then partners capital account. Clear? And a new firms account. Okay, these three things will be making to close the accounts of old firm. Clear? Then last thing, they may ask you to prepare balance sheet of new limited companies. Okay, so this is the fourth thing. Okay, so I'll repeat. First, calculate PC, amount of PC, that is purchase consideration, amount to be paid by the new company to old company. Okay, then its discharge, how the payment will be done, in what form. So new company may give its shares. Okay, new company will have equity shares, preference shares. Okay, so it can use these securities to pay the price. Clear? Then third thing what we have to do is close the books of old firm. Okay, since the partnership firm is taken over, we have to close its books officially. Okay. Then fourth thing, you have to make balance sheet of new company, new limited company. Okay, students. So let us start with the first part, calculation of PC. The PC can be sometimes directly given in the sum that the new company agreed to give rupees 10 lakhs. This is a purchase consideration for the assets and liabilities taken over. Here, this way, sometimes they may directly give the values. Okay, but don't expect that in our sum. In our sum, you have to follow net assets method. In net assets method, what you have to do? You have to record all the assets which are taken over by the new company minus liabilities taken over by the new company, and the net value will be your PC. Okay, so in this sum, it is given as per net assets method only. Okay, so let us make first working note. Working note calculation of PC. Okay, purchase consideration. Okay, as I told you, PC is nothing but the amount paid by the new limited company to the old firm. Okay, now logically, how much a value the new company will give? Well, definitely, which will be equal to the worth of business which is taken over from the old firm. Now, suppose new company is taking over building machinery, then it will pay value of these two assets. If new company is taking over all the assets, then it will pay for all the assets. Clear? Okay. So the formula is very simple. Assets taken over by new company. Okay. Less liabilities taken over by new company. Okay. So when you take over liabilities, it means you agree to pay their debt. So definitely you will pay less that much amount, isn't it? Now let us read the sum and let us calculate the PC. Okay. So I'll start reading from the second paragraph below the table, below the balance sheet. On 1st April 2019, Ayodhya Limited was formed to take over the business of the firm on the following terms. Goodwill of the firm is to be valued at 2 years purchase. Okay, now this information belongs to calculation of goodwill. See, the old firm was doing business for many years. Okay, so it must have some reputation in the market, which will help this limited company to earn the profits directly, isn't it? So as a result, the old company may demand some value in and over the excess of the net assets value. So suppose new company is taking over 1 lakh's worth of assets, then the old company will demand something more than 1 lakh. Why? Because it has built up its reputation over the years. So it will ask something towards that reputation. Okay, it is called as goodwill. Okay, so normally it is based on past profit. Okay, now I'll show you how to calculate. It's very simple. Right here, calculation of goodwill. Okay. Now, let's say the goodwill of the firm is to be valued at 2 years purchase. 2 years purchase means into 2 multiplied by 2. Okay, multiply by 2 of what? Of average profits of preceding 4 years. So first you have to take average of preceding 4 years. The firm's profits in preceding 4 years were 30, 40, 46, 44. After setting aside 2000 as reserves. So question is silent whether we have to consider profits after setting aside that 2000 or before that. So what we'll do, we'll take the profit figures which are directly given to us. Okay. We'll consider that 2000 as mandatory or necessary to be kept aside. So what will be your average profit for last 4 years? How do we get average profit? Average profit is equal to total profits divided by number of years. Okay. So add profits of last 4 years. Let us do it. It's 30,000 plus 40,000 plus 46,000 and 44,000. Okay. So we get 1,60,000 as our total profit. And this is for last 4 years. So we'll divide this by 4 to get the average. Okay. So 1,60,000 divided by 4 years. So your average profit is 40,000. Okay. So goodwill is 2 times of this 40,000 rupees. I hope this is clear. So your value of goodwill is 80,000. Okay. This calculation will have 2 marks itself. Okay. Calculation of goodwill. So in assets taken over, first write goodwill. Okay. How much? 80,000. I hope you understood how we calculated value of goodwill. This will be the only difficult part in PC. Okay. If given. If goodwill is not there, then everything else is very simple. Okay. And if you see, goodwill is not that difficult. Okay. So we are done with the first part. Okay. Goodwill part. Okay. Then next, building and machinery were taken over at 2,50,000 and 90,000 respectively. So I'll add now building my building is 2,50,000 and machinery is 90,000. Okay. Next, provide doubtful debts at the rate of 5% of debtors. So while taking debtors, reduce 5%. Okay. So what is the value of debtors? It is 52,000. So I'll take only 95%. Why 95%? Because you have to reduce 5%. So into 95%. So 49,400. Clear, friends? Next, the firm agreed to discharge 12% bank loan. Firm means the old firm. Okay. It means bank loan will not be taken over by the new limited company. So in PC, don't take bank loan. Okay. Then other assets and liabilities were taken over by the company at book values. Now let us see how many assets are left, and we will take them at the book value. Book value means whatever value is appearing in the balance sheet. Okay. Now let us see which assets are left. We are taken building, machinery, stock. Yeah, nothing mentioned about stock. So it will be taken over at the given value. That is balance sheet value. Understood, students? So what is the value of stock? 35,000. So I'll write 35,000. Okay. The just calculation of PC will give you 7 to 8 months out of 20. This is important. Okay. Then next, debtors we already took. Bill receivable not mentioned, so we have to take bill receivable. Add book value, that is 23,000. Then bank balance. Okay, regarding bank balance, it was told that, see, one liability we are not going to take over. Which liability? 12% bank loan. Okay, it was mentioned. Okay, just 2 lines before. The firm agreed to discharge 12% bank loan. How firm can pay bank loan? By using your bank balance, isn't it? Okay, so what was the bank loan amount? 15,000. And what is the bank balance? 22,000. So can you tell me how much balance is left with the bank now? So I'll write bank. It will be 22,000 minus it paid bank loan 15,000. Clear? So we have to take only 7,000 as bank balance, which is left with the bank. I hope this is clear. So whenever they say any liability is paid by the firm, then what you do, you make that liability 0 and reduce that much amount from the bank balance. Okay, students? Okay. Okay. So I think all the assets are taken. Now we'll subtract liabilities out of this. Okay. So less liabilities. Okay. Now look at the liabilities. While taking liabilities in calculation of PC, don't take capital accounts and reserves. Okay, I'll repeat. While calculating PC, we subtract liabilities which are taken over by the new company, new limited company. Okay. In these liabilities, don't take capitals and reserves. Okay. So, capital account of Ram won't be taken, Lakshman won't be taken, reserves won't be taken. Bank loan is paid by the firm itself, so won't be coming in our PC. Then creditors, yes, this will come. So, right. Sundry creditors. How much? 65,000. Right, 65,000. Then bills payable. Bills payable. How much? 33,000. Okay. Okay. Now add assets and subtract liabilities. You will get PC. Okay. Total is 534400. You can just do the summation. Okay. So total assets is 5,34,400. From this, we'll subtract total of liabilities. Okay. Which is 98,000. Okay. So your PC will be, purchase consideration will be assets taken over minus liabilities taken. So your PC is 4,36,400. Is this clear, students? How to calculate PC? It's very simple, not that difficult. Okay. As I told you, whenever there is conversion or amalgamation, a new company is formed and it takes over the business of old firm. So whatever new company pays to the old company or old firm, it's called as purchase consideration. How to calculate purchase consideration? Simply add all the assets which are taken over by the new firm minus liabilities taken over by the new firm. The net value is your purchase consideration. I hope this is clear. Okay. There will be at least 6 to 7 marks just to calculate this PC. Okay. And if you want to go further, at the end, we are going to make balance sheet. Well, let me tell you, the balance sheet will have exactly these items. Okay. So I can say that PC will give you at least 10 marks out of 20. Okay. Okay. So now we'll just move this calculation of goodwill a bit below. Okay. So that we have space here. These 2 days have been very busy because tomorrow conference is there, na? And your exam is also lined up in this week only. So it's very hectic time for me. But still, your study is also important. Okay. So I hope you understood this, right? So calculation of PC is done. Okay. Now, as I told you, one more concept is there. It's called discharge of PC. It is called discharge of PC. What is discharge of PC? What new company is giving you in return of your PC is called as discharge of PC. Okay. I'll repeat. What new company is going to pay to settle your PC purchase consideration is called as discharge of PC. Okay, see, in 6th adjustment, they have told us how they are going to pay this 4,36,400 to us. Okay, they have told us how they are going to pay this. Okay, so let us see what they are paying. Read the 6th adjustment. The company discharged the PC by issuing rupees 3 lakh equity shares of 10 each. So, first of all, they are giving us equity shares. Okay. How much? Rupees 3 lakh or worth rupees 3 lakhs. Okay. Okay. Then next, and rupees 1,20,000, 10% preference shares. So we are getting 1,20,000 worth 10%. This 10% is just a name. 10% preference shares. You don't have to calculate 10%. Okay. It is the rate of dividend which company will be paying to the preference shareholders every year. Okay. Now we know the total. Total is 4,36,400. Right. So out of that, bifurcation of two items are already given. Okay. So out of 436, they are paying us 3 lakhs in the form of equity shares and 1,20,000 in the form of preference shares. And they said, and balance in cash. So cash will be the balancing component. So let us calculate from the total. I'll remove equity share and preference share. I'll get the cash balance. So they are going to pay us cash of 16,400. Okay. Clear, students? So I have taught you how to calculate purchase consideration and discharge of PC. Okay, this is very useful in the next step also. Okay, so we are done with the first two steps. Okay, we calculated PC and we showed discharge of PC. Now, next is close books of old firm. We have to close books of old firm. Now, how to do that? It is also not, although it is time consuming a little bit, but not difficult. Let me tell you. Okay, you have to make 3 accounts. I'll show you which 3 accounts you have to make. First is realization. First account is realization account. The format is simple, particulars, and amount. Okay. This is debit side, same way we will have credit. Particulars and amount. I didn't have even time to choose a new sum. Okay, whatever sums were available in this file, I just took up. I thought this was because it was written amalgamation. But when I read, I come to know that it's a conversion sum. So first I had put on the group that I'll teaching you amalgamation, but when I saw it's conversion sum. Okay. I'll make the format. Let me tell you, if you learn conversion, it is very similar to amalgamation. If you learn amalgamation, it is very similar to conversion. Not much difference is there. Okay. I'm still receiving those messages for conference, but now this time belongs to you. So you are my priority, right? Okay. So we have to make a realization account. Then we have to make partners capital account. In this firm, 2 partners are there, Ram and Lakshman, right? So I'll make partners capital account. Next to this, partners capital account. I'm very bad with this feedback. Capital account. Okay, now it will be particulars. We have 2 partners, Ram and Lakshman. Okay. So same way, this on debit side, same way we'll have credits. Okay. Then one more account we need, that is new firm account. Okay. New firm, which is new company, Ayodhya Limited. So Ayodhya Limited. Okay. It will have only one column, so I'll make it right here only, below realization account. In the section, rows here. And Ayodhya limited here. Ayodhya limited. Okay. These three accounts we have to make to close the books of old company. So these three accounts in the books of partnership form. Okay, I'll just revise once again what we did till now. Whenever you are solving a sum of conversion, remember you have to make these four things. First, calculate PC, then discharge of PC. Some people consider student take up the call now. Okay, first is you have to calculate PC, then show discharge of PC. Sometimes the discharge of PC and PC is considered to be one part. So okay. Then close the books of old firm, then balance sheet of new firm. Okay, these four things. Out of that, we are done with the first two part. We calculated PC and we showed discharge of PC. Okay. Now we are closing books of old firm. Okay, for that, we are opening these three accounts: realization account, partners capital account, and Ayodhya limited. Okay. Let's shift this sum on this side. Okay. 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 Now, when you make these three accounts, first of all, the step one is transfer all the balance sheet items to these three accounts. Okay. This is a very simple step. Okay. I'll repeat. When you open the account, this three account, relation account, partners capital account, and new firms account, what you have to do? First, transfer the entire balance sheet to this account. Okay. Now, we'll start with the liability side. We are given capitals. Okay. So capital will go to capital account. Okay. So I'll write in the capital account. On the credit side, buy balance brought down. Okay. Capital of RAM given is 1 lakh. Lakshman is also given. Okay. Next, we are given reserves 70,000. So they also belong to partners. So we'll go to partners capital account by general reserve. Okay. How much it is? 70,000. So partners are sharing profits equally. See the first line. It was told us that these are equal partners. So both of them will get equal share in the partnership reserves. Okay. Whatever reserves are there in partnership form, both have equal rights. Clear? Okay. Then 12% bank loan. Okay. It was 15,000. So, these students will post bank loan here by bank loan. How much? 15,000. Okay. The next creditors. By creditors. See, whatever belongs to partners will go to partners capital account, and everything else will go to realization. Okay. I'll repeat. Whatever belongs to partners will go to partners capital account. Everything else will go to realization account. Okay. The liability head indicates credit. So till now, all the items are posted on the credit side, either of partners capital or realization account. Okay. So you must have done this in 12th standard resolution of partnership form. Okay. Very similar to that only. So creditors are 65,000. Clear? The next, bills payable by bills payable. Okay. 33,000. Then now go to asset side. Okay, always remember when you are transferring the balance sheet to these accounts, these three accounts, always remember take balance sheet values only. Write down somewhere. While transferring balance sheet items in old firm's account, always transfer the values at balance sheet figures only. No? Don't change a single value. Okay. So assets will appear on the asset side, debit side of relation account. So 2 building, 1,75,000. Whatever new values are given, those are given for calculating PC. Okay, for closing books of old form, don't use new values. Okay, remember this. To machine, 76,000. Next, to stock, 35,000. To debtors, 52,000. Bills receivable, 23,000. To bank balance, 22,000. Okay. Is this clear, students? So we have posted all the items which were there in the balance sheet. Okay. I'll repeat. We have calculated PC. We showed discharge of PC. Then we go to closing the books of old firm. Okay. The first step is very simple. What you do, you transfer all the items of balance sheet either to partners capital account or realization. Okay. Credit items, that is liability items, will go to credit side. Assets will go to debit side. Okay. On the liability side, we had partners capital and reserves, which belongs to partners. So they will go to partners capital account. Okay. And other assets and liabilities will be posted to realization account. Assets on the debit side and liabilities on the credit side. Okay. So this will give you at least 3 to 4 marks. Okay. Very simple part. Okay. Now comes the main part. Since we have sold off this business to the new company, we have to pass entry for sale of this business to the new company. Okay. So Ayodhya Limited is a new company. Okay. So Ayodhya Limited is a receiver. So Ayodhya Limited account debit to realization account. Okay. See, assets are appear on the debit side. We sold them to Ayodhya. So we'll write on the credit side by Ayodhya Limited. Very simple entries. Okay. And you have to write amount of PC. Okay, you have to write amount of PC, which is 4,36,400. 4,36,400. Is this clear, students? Then give second effect in Ayodhya Limited on the opposite side. What we will write? To realization account. Clear? How much? Same. 4,36,400. Is this clear, students? Step 1 was transfer all the balance sheet items to the respective accounts. Whatever belongs to partners capital, we transfer to partners capital. Then remaining liabilities on the credit side of realization account. All the assets on the debit side of realization account. Which values you will take? We will take adjustment values or balance sheet values. We have to take balance sheet values only. Okay. Then next step is sell or record PC. Sell business, okay, or record PC. To whom we have sold Ayodhya. So debit the receiver, Ayodhya Limited account debit to realization. So in realization we will write by Ayodhya Limited full PC value, and in Ayodhya we will write to realization account full PC value. Clear? Now what Ayodhya will give us? For that, what will be the entry? Debit what comes in, what we are getting, equity shares, preference shares, and cash to Ayodhya. So in Ayodhya it would be buy equity shares in Ayodhya. Okay. How much? It was worth 3 lakhs, isn't it? Then we are getting preference shares by 10% preference shares. How much? It was 1,20,000. And the remaining was cash. So buy cash. Okay, what is the amount of cash? Let me check. What is discharge of PC? 16,400. Discharge of PC is 16,000. In cash, it is 16,400. Okay, that's it. Okay, so PC and discharge of PC will be recorded in Ayodhya Limited account. So this account will get tallied at 436. Here, students, I'll repeat the steps. Okay. When you are closing the books of old firm, step 1, transfer all the balance sheet items. Okay, at the book value. Okay. Hello. Okay, step 1 was transfer all the balance sheet items to realization account and partners capital account. Clear? After that, record PC. Okay, how to record PC? In realization account on the credit side, right, by Ayodhya Limited, and in Ayodhya, right, to realization. Okay, so we recorded PC, that is sale of business. So Ayodhya will give us now shares and cash. So in Ayodhya Limited, on debit side, we wrote sale entry. Now we will record what we received. Okay, so by equity shares, by preference shares, and by cash. Clear? Is this clear, students? I hope this is clear. Now, what you will do with these shares? Definitely, you will give this to your partners, isn't it? So, in partners on the debit side, okay, they will receive this. Clear? Okay, so one by one, I'll record this. So, 2 equity shares in Ayodhya. Okay. Both are equal partners, so they will get it half-half. So equity shares for 3 lakhs. So each of them will get 1,50,000. Okay. Very simple sum, but lengthy sum. Okay. Then we will give preference shares also to 10% preference shares. Okay. Preference shares is worth 1,20,000. So we'll give 60,000 each to both of them. Okay. Then we'll give cash. Okay. So 16,400. So it will be 8,200 to each of them. 8,200 each. Clear? That's it. Okay, we are done. Now what we will do? We will close the realization account and find out profit or loss. And that will be again distributed between Ram and Lakshman. Okay, so let us close the account, students. See which side is heavier. Please check. I will just check. Okay, here we have 5,49,400. 549,400. I'll write here 5 lakh. We can use summation formula. Okay, 549,400. And take up other side also. Okay. Now let us see what is the total of debit side. Total is 338. Okay. So difference will be profit or loss. Since credit side is heavier, this is profit. Okay, so I'll write to transfer to partners capital. Okay. So how much is the difference? Let me check. 549,400 minus 383,000. Okay. So it is 164,400. Okay. Ram and Lakshman will get half of each. Okay, so I'll write here on the credit side of partners capital account by realization profit. Okay. They will get half of it. So it is 166,400 divided by 2. So 83,200. Okay. 83,200. Each of them will get 83,200. Okay. Now we'll close this account and it must tally. Okay. This account must tally. Partners capital account must tally. Let us see what is tallying. Yes, it tallies. Okay. So Lakshman tallied. Let us see. Ram. Yeah, it is tallying. Okay. So you get full marks in third step also. First, what we did first? We first calculated PC. Okay, then we showed discharge of customer. Clear? Now we have to make balance sheet. Okay, the last part, we have to make balance sheet of new company. Okay, I hope this is clear, students, till now. Okay, so now to make a balance sheet. Clear? So balance sheet is normal, that normal format. Okay. What I'll do, I'll shift everything that is old books to extreme right so that we can have a balance sheet format here. Let us make a balance sheet as on what are the date given? 1st April 2019 for new company. 1st April 2019. Okay, we will have liabilities, amount, assets, amount. Okay, now as I told you, the calculation of PC will help you in making balance sheets. Okay, okay. So let us do it. Let us record all the assets as it is on the asset side. And just copy and paste it here. And copy paste the values as well. Data worth is 49,400. Okay, clear? Then liabilities. These two liabilities are as it is. We haven't changed the liabilities. These two. Oh, now discharge of PC was done, isn't it? So even that will be reflecting in our new balance sheet. Okay, since company has given new shares. Okay, that's a new liability. Equity share capital. Equity share capital. How much was the equity share capital? 3 lakhs. Okay. Then preference share capital. 10% preference share capital. Okay. It was 1,20,000, right? And company gave third party in cash. Okay. How much was the cash paid? Since this was new company, it didn't had cash balance. So it will be reflecting as bank OD. It will reflect as bank OD. Okay. But how much it will be? It will be 16,400. Okay. So that amount 16,400. Yes. Okay. But out of that 16,400, OD not OF. Out of that 16,400, the company had 7,000 as balance received from the old firm. So that much amount will be reduced. And that 7,000 on the right hand side will vanish. So bank balance will be utilized here. Now we have to see if our balance sheet tallies. Okay, let us see. It's 5,27,400. 5,27,400. Okay, I'll just take the total now within summation. I know the bank balance or bank OD is not yet clear, but I'll show you again. Don't worry. I'll discuss that with you again now. Okay. So our balance sheet is tallying. So you get full 20 minutes. So some students, or rather, every one of you must have got confused. Sir, pehle 7,000 tha, now we got 9,400. Okay, I'll explain that now. See, when we took over assets, see, we had taken over this 7,000 as bank balance, isn't it? So the new firm had this 7,000 with it. Okay. Now, while giving the payment or discharging, it had to pay 16,400 to the old firm, isn't it? Company had to pay how much? 16,400 as a part of discharge of this. You remember that? Company had to pay how much? A liability of PC to be paid in cash. To be paid in cash was how much? 16,400, right? Clear? This was part of your discharge. Companies was liable to pay this much to the old owners. Okay. But how much cash it had? It had cash balance of 7,000 existing. Cash balance was only 7,000. Okay. So it could use that 7,000. But now, since the payment is made more and balance available was less, you have to take some bank overdraft. Okay. So that 7,000 will go away. Okay. Will be used to pay the, or rather to discharge the PC. And still further, we have to borrow how much? 9,400 from bank in the form of overdraft. Bank OD. Clear? So instead of showing 16,400 on the liability side as discharge of PC and 7,000 on the asset side, what we do? We record only bank OD as a net balance. I hope this is clear, students. Okay. So that was entire sum of conversion. Okay. Conversion and amalgamation are very similar. Okay. Very similar. Okay. So what we'll do? Tomorrow I'll take up a sum of amalgamation. Okay. Now it is not possible to take a screenshot of this. Sum is very lengthy. Okay. Okay, what you do is solve this sum while watching the video and make the entries in your books. Okay, that will be the best thing. Okay, students. So thank you for attending. We'll stop here. We'll meet tomorrow again. Okay, I have many things to do now for tomorrow's conference. Okay. So thank you for attending. We'll meet tomorrow again in the evening. Bye. See you. Take care.